and iPhone has never been more popular. During the December quarter, we set an all-time revenue record for iPhone, thanks to the strength of our incredible iPhone 13 lineup.
Here we are, 6 quarters of growth in the United States, this kind of growth over the fourth quarter that we haven't seen since the 1980s. This really does point to the fact that the business sector is starting to get more back to normal, and that's what we want to see.
If you look at the fourth quarter results, we had a very solid profit, better than what people thought we were going to have. It was sort of in between the Delta surge and the Omicron surge, at least for us. We've seen a lot of bookings canceled for January and February, but March bookings look good. We're predicting that we'll be profitable in March.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome, and here's what's coming up on today's program. Rate hike bets ripple while treasuries resume their declines. Apple surges in after-hours trading as it blows through estimates and supply chain concerns, posting record sales. And we look at luxury. LVMH posts record annual sales as customers snap up couture and cognac, cementing the group's rebound from the pandemic. So we have a lot going on today. Let's get straight to the markets. To our markets expert, our editor, Christine Aquino. Christine, I know there's a repricing certainly on how many hikes we'll get from the Fed, how many hikes we'll get from the Bank of England, and that's moving at the fixed income space.
Absolutely, Francine. We're definitely still seeing an extension of those bond yields, particularly in the Treasury sector, seeing those gains in yields across the curve, about 2 to 3 basis points across the curve at the moment. And of course, we're also seeing a similar move in the dollar because we're seeing that relationship really between Treasury yields and the dollar reestablishing itself. At the start of the week, the dollar was all about risk aversion, but now as we're ending the week, it's going to be all about that rate differential story. The dollar, of course, extending its gains, but stopping just short of that 16-month high that we saw in November.
Yeah, and we're just getting also some GDP figures, Christine, out of Germany, that economy contracting 0.7% in the fourth quarter. Christine, overall, is dollar and dollar dynamics probably the most interesting bit in assets right now?
I would say it is definitely one of the most interesting bits, Francine, because of course it has repercussions for assets across the board, particularly that emerging market complex. I mean, you know, we're seeing emerging markets definitely feeling the brunt of the sell-off in markets this week as risk aversion takes hold everywhere with that Fed hawkish surprise. And really the story is going to be, will those emerging market currencies be able to overcome the dollar strength that is about to descend upon us? And especially because we've seen emerging markets also seeing similar struggles as the Fed. You know, central banks there have really tried to get ahead of the curve in terms of inflation with massive rate hikes last year. Now the Fed is about to embark on the same tightening cycle, and the question really is, will they be able to maintain that strength, or will the dollar really just sweep across everything and push everything lower, especially if we see that renewed strength on the back of Fed tightening?
Yeah, and I wonder whether, Christine, a lot of the repricing is also because day in, day out, we talked about supply chain concerns. Day in, day out, we heard about some of the chips not being available, even from Apple, that probably overpays or pays more than other competitors for some of these components. Now, with the fact that actually we don't have the supply chain constraint, will it reprice? I mean, could it reprice earnings, for example, or some of the equity stocks?
Well, Francine, I think is definitely one to watch. Certainly the question of higher costs, whether it's resulting from the supply chain issues, as you alluded to, or other things. You know, I mean, we're seeing similarly LVMH, for instance, reporting higher costs as well in their results. But then they're able to overcome that by really exercising this tremendous pricing power that they have over the markets at the moment. But really, you know, whether it's even if the supply chain issue is easing somewhat, as we gleaned from Apple's results, there are still issues related to overall costs that could be a big factor for margins. So that's going to be one to watch for sure when we see more earnings from different companies coming through.
Wonderful. Thank you so much. Our markets editor there, Christina Kino, looking at some of the big market moves. Now let's get more on Apple. The world's most valuable company reported earnings after the bell, and Apple's strong results really defied fears of a supply chain disruption. Let's get straight to Laura Wright in London, who has all of the details. So Laura, this is encouraging news. So maybe some of the fears were overblown.
That's exactly right, Francine. The fears were overblown. And on the earnings call, the CEO, Tim Cook, he was reticent to change Apple's supply chain because it has allowed them to be so resilient. We can see in pre-market trading that Apple is surging. This record for the fiscal first quarter, EPS smashed $2.10 a share, surpassing a $1.90 that the analysts had predicted. Gross margins were at a 10-year high, which shows the pricing power that Apple has had in the market. Phenomenal growth from Macs, phenomenal growth from services. We know that Apple is pivoting toward a more services-based ecosystem. Hybrid working seems here to stay. Interestingly, disappointing sales for the iPad, although on the earnings call, we learned that iPhones had been prioritized compared to those tablets. The regional breakdown, China was the outperformer, 21% revenue growth year over year. Japan, a notable laggard, double-digit negative territory, suggesting that particular market is saturated. The largest, the United States, was stable, along with the European Union. So what do the analysts think? I was talking to one in the early hours of this morning from Evercore ISI, and he told me, looking ahead, the March quarter is a potential headwind. It's seen as being pivotal. That said, a multitude of new products are coming out. The iPhone 14, Francine, I'm still using the 8, and also the metaverse. Apple is going to enter the metaverse with virtual reality.
The 8. Laura, you at least have to get onto the 10 or the 12 because it has a beautiful portrait mode where you can get pictures. That is your assignment for the weekend. Laura Wright going through some of the wonderful things that we've heard from Apple. Of course, still concerns about some of the shipping and delivery. Coming up, we cover the 5th day of voting for a new Italian president. We still don't have a consensus candidate. We look at how the country's economy can recover from the pandemic. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. So let's get straight to the Bloomberg. First word news. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Let's start here in the UK. A report into alleged rule-breaking parties in Downing Street could be stripped of key details following a request by London's Metropolitan Police. Civil servant Sue Gray was commissioned by Prime Minister Boris Johnson to look at allegations that lockdown rules were broken repeatedly by his office. Gray's findings were originally expected to be published this week. Now, President Joe Biden has spoken with Ukrainian President Volodymyr Zelensky over growing tensions with Russia. Following the call, Zelensky tweeted that the conversation covered diplomatic efforts to de-escalate the situation and potential financial support. Biden is planning to raise the issue with German Chancellor Olaf Scholz when he visits Washington next month. Pfizer has got the nod from the EU drug regulator for its COVID-19 pill. Paxlovid is the first oral treatment for the virus recommended in the bloc, with trials showing it can reduce hospitalizations and deaths among high-risk patients by nearly 90%. Pfizer says research shows the drug is effective against the Omicron variant. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Italy entering day 5 of voting for a new president. The Prime Minister, Mario Draghi, still seen as a potential favorite, but after 4 rounds of voting, he still hasn't got the backing of lawmakers. So let's get the very latest to discuss this. Then we'll also talk about supply chains, inflation, and the Fed. We're joined by Brunello Rosa, Chief Executive and Head of Research at Rosa and Rubini. So, Brunello, as always, thank you so much for joining us. I mean, there are a number of ways this could go. Either we have an unknown president of the republic that is actually quite, stately. Usually it's someone that's a little bit older, cross-party, without a real agenda. Or Mario Draghi still becomes president of the republic. Are his chances increasing or decreasing with every day that goes on?
Increasing for the very simple reason that if parties don't find alternative solutions, then there's only one institutional, in inverted marks, solution available, and that's Draghi becoming president. There are others, of course, such as promoting the current president of the Senate, Elisabetta Casellati, to the highest job in Italy, but this is perceived by the left as a partisan choice by the center-right, so he's not going to get the backing of that part of parliament. Yeah. So eventually, parties will have to agree on somebody. If nobody comes up, is Mario Draghi most likely.
So, Brunello, what's the best case scenario for the markets? I mean, does the market really care if Mario Draghi becomes president or prime minister as long as he stays in some kind of power in Italy?
The market is happy if Mario Draghi is in the picture. Best solution would be Mattarella for longer and Draghi at Palazzo Chigi for a little bit longer, but then you would have a problem in 2023. So to some extent, you solve the problem now, the president, for the next 7 years, and then you find perhaps a caretaker or technocratic government for another year until the elections, and then after the elections, a new political government emerges. As long as there's clarity after the election, the market will be relatively happy, I think.
Brunello, give me a sense of actually how Italy fits into this wider concern about access to the EU recovery funds, how it fits in with these higher energy prices and some of these supply chain constraints. Does Italy have to play a game of more friendliness to Russia because it's so dependent on it for trade?
Well, Italy doesn't have gas or oil resources to speak of, and therefore it relies on supplies from other countries. He has had his own bilateral relationships with Russia and China, but these have caused, of course, a bit of concern in Washington, and therefore effectively Italy has delegated all his relationship with these foreign countries, such as Russia and China, to the EU, and that's how it fits in the more general global supply chain issue, knowing that Italy, of course, also as a producer of cars, is being affected by these supply chains bottlenecks.
Brunello, we've also had some, a repricing after a more hawkish Fed, and that's impacting a lot of assets. Will it impact what the European Central Bank can do, and what does that mean for an economy like Italy?
The ECB is on a different page compared to the Fed. The inflation rate in the US is 7%, in Europe is still 5%. In both cases, it's seen peaking short term, and therefore the ECB can afford to be slightly less hawkish than the Fed. Yet they said that PEP will be discontinued in March, and it was going to be replaced by a much smaller APP. The implications for the dollar, euro dollar, I think we're seeing that so far. The monetary policy differential is coming back in vogue. Higher inflation, higher rates clearly is not good either for bonds or equities at this stage.
Brunello, what's your prediction for the Italian presidential race? I can bet you actually an espresso or even a macchiato, no expenses spared, in front of, Caffè Grande Eustachio in front of the Senate, if you get it right.
Okay, that's a good bet. I still think Draghi has the higher chances, but not over 50% at this stage. The point is all the others together don't reach 10% each. So eventually, Draghi is the one with the greatest chances at this stage, I think.
All right, wonderful. The espresso bet is on. Brunello Rosa there, Rosa and Rubini, Chief Executive CEO and Head of Research, joining us today. Now, coming up, we talk a lot more about some of the earnings season. Electrolux net sales beat estimates in the fourth quarter. We talk to the Chief Executive, Jonas Samuelson. He's up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, let's look at earnings. And Electrolux reported net sales for the fourth quarter that beat the average analyst estimate. The Swedish domestic appliance maker says it expects demand this year to be above pre-pandemic levels. Now, we're joined now by the Chief Executive to discuss the results and the outlook for the year. The Chief Executive, Jonas Samuelson, joins us. So, Mr. Samuelson, thank you so much for making the time to speaking to us today. How do you see demand going? Will there be stronger demand from some of your products going forward, or do you see that waning off?
No, I think we will see continued fairly strong demand as people are continuing to invest in their homes, working more from home, and using their appliances more frequently. You know, that all points to continued solid demand going forward in most markets.
Are you expecting to gain in market share? So what regions do you think you can grow bigger, and how much of a difference does it make?
Yeah, in 2022, it's going to be our biggest launch year ever in terms of new products that we're introducing. So we expect to gain market share in the premium end of the range, both in North America and in Europe, and also in Asia Pacific. So very solid year ahead of us in terms of market share opportunity through innovation.
Mr. Samuelson, I was asking you whether that would make a difference because some of your competitors are struggling to keep up with demand. I guess there are some components that are actually very difficult to find. Will you see the same concerns going forward?
Yes, I think we're obviously at the peak of the Omicron surge, and in a situation that was already quite constrained, both in terms of ocean logistics and electronic components. We're expecting that to continue at least into the second quarter. With quite high risk of disruption.
So do you see the situation improving at any point because of these supply chains, or will it be much more protracted than we think it will be right now?
Well, I think as the pandemic hopefully starts to wane into the second quarter, and some of these backlogs or interruptions get washed out, I think there's a good opportunity that we'll see sequential improvements. I think there, some areas like, semiconductors, there probably will be constraints also into the second half, but a lot of the other ones will gradually work themselves out, I think.
Yeah, so what are some of the other ones actually where we could see supply chain, hiccups? I don't know is it still electronic components or is it something else?
Electronics is by far the most challenged, but throughout last year we saw certain plastic grades, certain steel grades, and other components, on and off being constrained because of disruptions really driven by the pandemic, and hopefully there we will see a gradual improvement in the stability of supply as the pandemic wanes. But again, the part that seems to be a little bit more protracted is the electronics. Semiconductors.
When will steel prices stabilize?
I think steel prices have started to stabilize at high levels right now. To be frank, I think those prices are above long-term equilibrium. As demand stabilizes, I think supply will come on stream, and hopefully there will be a downward trend in steel prices. Sometime in the not too distant future. Hard to call exactly when.
What happens to energy prices from now? I know we're expecting them to rise, certainly in Europe, for at least a couple of months. Do they stabilize after that, and can you hedge against them?
Well, I can't say that I'm an expert on energy prices, but certainly as we get into the warmer months, I assume that supply will be, will be stronger and prices will come down as a consequence of that. Certainly for electricity, it's not a major component for us, so it's not something we track as closely as, for example, steel and plastics.
Mr. Samuelson, what can you tell us about your share buyback program? How will that progress in the next couple of quarters?
Well, the board announced in the fall last year that they're intending to introduce an annual sort of recurring buyback program, something we haven't done for quite a number of years. But we expect to continue to buy back shares consistently over the coming several years. They announced the intention to buy back about 2.5 billion Swedish krona worth of share. It's an amount that's similar to the annual dividend. So, and that's a level that I think can be sustained for quite some time.
All right, so Mr. Samuelson, thanks so much. Jonas Samuelson there, the Chief Executive of Electrolux. Now, coming up, we'll have plenty more, of course, on some of these earnings. We also have more from the fifth day of voting for a new Italian president. We'll be speaking to the Minister for Ecological Transition, the Energy Minister, Roberto Cingolani. Stocks mixed. U.S. futures actually fluctuating a little bit. Again, investors trying to figure out what the message from the Fed this week means for their portfolios. We had strong earnings from Apple, but of course there's always these prospects of tightening policy in the U.S. This is Bloomberg. Rate hike bets ripple through the markets. Treasuries resume their declines. We'll have plenty more from Italy throughout the day. It's voting day 5, and we'll look at what that means for the future. And finally, Apple surges in after-hours trade. Those concerns about supply chains didn't really come to the forefront. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Let's get straight to the markets, and let's get straight to our editor, Christine Aquino. Christine, we look at the markets on the back of what the Fed did, and it does seem that markets are fluctuating a little bit. Yes, they know that the Fed was maybe a little bit more hawkish than they were expecting. In certain parts of the markets, that's being repriced, but otherwise they're also focusing on these strong Apple earnings.
Absolutely, Francine. And I think that really just speaks to how noisy this week was when it comes to several catalysts, because at the start of this week, we were, of course, very much focused on that sell-off in equity markets driven primarily by the tech sector. But then, of course, we shifted the catalyst over to the Fed and that hawkish surprise from Jay Powell and finishing the week on good Apple earnings. So there's a lot going on in markets at the moment. And so there are a lot of conflicting signals. Of course, the equity sector very much reacting a little bit to what we saw from Apple, less so in Europe, of course, because as we know, Europe is a value play. It's not a tech play. So we're seeing equity indexes in the region primarily down here. But yeah, I think overall there is this battle a little bit between the good, rather good earnings from Apple and a number of other companies that we've seen this week. LVMH, of course, included in that, versus the future trajectory of what the Fed's going to do when it comes to policy.
All right, our markets editor there, Christine Aquino, with the very latest. Thank you so much for joining us. Now, it is day 5, Italy entering the 5th voting day for a new president. Lawmakers still have not managed to agree on a new president after a 4th round of voting, a sign that it will be harder than initially thought for Prime Minister Mario Draghi to get the job. We are delighted now to be joined by the Italian Minister for Ecological Transition. He's the Energy Minister, and he's Roberto Cingolani. Mr. Cingolani, thank you so much for joining us. We've been talking extensively, of course, about the price of energy. We've been talking extensively about the price of gas. Is the Italian government mulling a new intervention to try and appease some of the pressures, not only on families, but on businesses?
Yeah, so far we've invested about 10 billion in mitigating the impact of the gas prices on the energy bill of the families, and of course the small medium enterprises. So we made a number of new laws over the last few trimesters, and of course we're monitoring the projection of the market, because we feel that this gas crisis will be long lasting. So we will need structural measures in the future to mitigate the cost of energy.
So, Minister, give me a sense of how much more, Italy could actually afford to spend when it comes to, trying to appease some of the higher energy prices. Is there, can the budget afford this kind of support?
Well, so far we're trying to mitigate in real time the increase of pricing. But of course, as we see that the crisis is really complex and will be long-lasting, I think we should do more. And I believe that at European level, we should discuss about common storage of gas, joint procurement, to mitigate the global cost of the gas. And of course, I think we need to reanalyze the way electricity pricing is made so far. I mean, I don't think electricity can be linked anymore to the cost of gas. It's a nonsense right now. Maybe in the past was useful to accelerate the renewable energies, but no longer now. And finally, we should take into account the geopolitical situation that is very, very complex at the moment. Don't forget that about 800 billion cubic meter of gas over the next decade will be forwarded towards the east of the planet because of decarbonization to phase out the coal. And this, of course, will make the situation even more complex for the gas.
Minister, at the same time, we're seeing the situation extremely complicated because of Ukraine and all the geopolitics. Italy is effectively one of the countries in Europe most reliant on Russian gas. So do you worry that extra sanctions on Russia means higher prices for Italy?
That's a very complex problem. Our energy mix is basically monochromatic. We have gas, 95% of which is imported, and then we have renewable energy. With such an energy mix and such an extent of import, we might be in danger in case of a global crisis of the gas providers. So we are monitoring the geopolitical situation, but as you understand, this is something in progress so fast and minute by minute. It's difficult to say what happens tomorrow. So we're just monitoring, watching. We have some contingency plan, of course, but we hope it will not be necessary.
Yeah. Is Italy ready to reintroduce nuclear power?
Look, we have a law after 2 referendums that states that we cannot make new nuclear power installation. So that is out of the discussion. And honestly, as I'm a technical minister, I wouldn't support right now in 2022 the construction of new nuclear plant of 2nd and 3rd generation. On the other hand, I'm very interested, I'm sure in the future, this could be a viable solution. The development of 4th generation small modular reactors could be a solution. We need to invest a lot in research and development, and this has to be a world effort. It cannot be a single country effort. And I'm sure something good will come out of that.
But so should gas and nuclear actually be part of the EU taxonomy plan, and is Italy ready to fight Germany on this?
Look, the taxonomy, we have to understand there are 27 countries with completely different energy mix. So the taxonomy must be inclusive. There cannot be a single solution valid for the entire European landscape. So there are a dozen of countries having nuclear power, others having massive use of coal, and others like Italy having renewable and gas. So of course, the taxonomy has to be rather flexible and inclusive. In that, I think it's a reasonable document. And don't forget, this is a financial delegated act, so it gives an idea of where we should invest. Well, you should not say to a country, you cannot do this or you cannot do this. So it's reasonable. For the time being, it's a good document.
Minister, give me a sense of how much the increase in energy prices will impact GDP. How much are you expecting GDP to be affected by this?
I mean, of course, we hope this will not grow steadily as it was so far. The impact can be really bad. We expect something like 30 billion increase in the energy cost for the country in 1 year. So this is actually a big number. And we are actually accelerating with our economy, so we are very happy with this. But of course, the cost of energy is going to impact, is going to be counteracting. I'm not able to make a forecast right now, and we hope will not be that bad.
Minister, finally, the impossible question, when do you think we'll have a president by? We're here covering the elections, we're on standby, it's the 5th day of voting. How quickly will a name emerge?
Okay, I'm a technical minister, I'm not a voter. So as any other Italian citizen, I'm looking forward to having a high-level profile as a president. and I hope this will be found in the next couple of sessions. I'm not a voter, so I'm just following the story like you are.
Okay. But do you think you'll still be minister in a couple of months? Do you think Mario Draghi will become president of the Republic?
It's hard to say, but I think Mario Draghi is such a fantastic guy that we should really have him on board in this country. I mean, he's really a solution to many problems, and wherever he will be acting very well. So I just hope he will be around as long as possible.
Minister, thank you so much for joining us. Roberto Cingolani there, the Italian Minister for Ecological Transition. Now, we'll have plenty more, of course, from Rome. We're at day 5 of voting, but we also have a lot of earnings to get through. So coming up, H&M reports pre-tax profit for the fourth quarter that beat estimates, and we talk to the Chief Financial Officer, Adam Carlson. He's up next, and this is Bloomberg.
There are multiple supply chain challenges.
Who knew that global logistics was this fragile?
We have to be careful because we all live in a very, very chaotic world. And uncertainty is the rule of the day.
Supply chains around the world are very constrained. The uncertainties are going to be here I foresee it into 2023.
We have seen shipping and container shipping prices increase by a factor of 3.
We'll see price hikes from businesses to consumers.
And so it's inevitable that some of that will have to be priced through towards the end markets.
The labor market says it's very tight. So it appears that the economy has less capacity than we thought. And so that's why we're in a situation where inflation, has not faded away quickly.
It's coming throughout the business. It's coming in supplies. It's coming in wage inflation, etc. So of course, the key here is to maintain a pricing power and to be able to share that pain with customers.
It will always be part of the discussion from now on.
Inflation, of course, part of the discussion, and those were some of the discussions that we've been having about it on Bloomberg TV. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UniCredit has posted fourth quarter revenue ahead of estimates on higher income from fees and lending. The Italian company joins rival Deutsche Bank in driving gains to the top line while seeking to keep a lid on wage costs amid the boom in deal making. The revenue gains are a boost for management plans to return almost 3.8 billion euros to UniCredit shareholders in the coming months. Now, Robinhood shares have tumbled in post-market trade after revenue and outlook at the US brokerage missed estimates. The platform slashed its forecast for the current quarter to $340 million, down from $447 million. Robinhood shares were already 70% below its July IPO price. SoftBank has confirmed its COO, Marshall Claw, is leaving the company. The departure comes after clashes with the founder, Masayoshi Son, over compensation and responsibilities. Bloomberg understands Claw pressures for more as much as $1 billion in compensation in recent months because of his contributions, including the turnaround of Sprint and the listing of troubled business WeWork. And LVMH has posted record annual sales with revenue of more than 64 billion euros, topping the previous record set in 2019. The gains by the French company, which owns brands including Tiffany, Sephora and Christian Dior, highlight the V-shaped recovery experienced by much of the luxury industry, underpinned by recovering economies and soaring asset prices. And that's your Bloomberg Business Flash. Francine.
There you go, Leanne. What do you do? If you have the money and you've been stuck at home for 2 years, you want to splash out, you buy yourself a couture gown, and why not? On to retail, or sticking with retail, H&M has set an ambitious goal of doubling its sales by 2030. Now, that's after the fast fashion retailer reduced discounts and lowered its long-standing inventory buildup. In its quarterly earnings report, H&M this morning also said it aims to cut its carbon emissions in half by the end of the decade. Well, we can find out more about this and the results. We're joined by the H&M's CFO. He's Adam Carlson. Adam, thank you so much for joining us. First of all, we were talking about inflation. A lot of your raw material costs are going up. Have you been able to pass this on to your clients and consumers?
Hey, good morning, and thank you for having me. Of course, we are working closely to secure that we can at all times offer our customers the best combination of price, quality, fashion, and in a sustainable way. Given the circumstances around us, we see that we have great opportunities to continue to collaborate with our partners in our supply chain to ensure that we actually have a competitive advantage towards other retailers facing the same situation. So we are closely monitoring the situation, of course also looking into how we, in a good way, can at all times secure our value proposition.
Adam, do you feel like you have more competition now than you used to in some of your core markets, including the U.S.?
I think competition has changed slightly. We've seen that the last couple of years have been challenging for the whole industry, and there are some smaller niche players popping up in many markets. But we still, with our focus on always being relevant for the customer in all parts of the world, we still believe we have a strong setup to create customer value all across the globe.
So when are you expecting us to go back to pre-pandemic levels in terms of shopping at H&M? And does that mean that you're looking likely to open more stores, or are you staying put for the moment?
Right now, obviously, we are happy to see that at least the store closure levels are coming down to a minimum, and hopefully this can then result in that we resume to a more normalized situation. Looking at 2022, we believe that there will be a slight decrease of the store portfolio, but we also see throughout the year then that the channels complement each other really, really well. So we have a good plan, but for 2022, we estimate a slight decrease of the store portfolio.
Are dividend payouts back on track?
Dividend has been proposed from the board to the AGM, and we are happy to see that part also of the capital allocation strategy can be resumed to a more normal level. So yes, dividends are back as part of the capital allocation.
I understand, of course, that, and we've been talking about this in the past, that how to deal with China has been troubling for H&M. Do you feel like those troubles are getting better or worse?
The situation is still complex, and we are working on it, but we prefer not to comment in more detail regarding the development in China at the moment.
But in terms of consumer demand, do you expect to be able to regain some of the market share lost in that, or is it just too soon to say?
Now, we're following the situation very, very closely, obviously, and we're working to secure that our consumers in China can still create a long-term relationship with H&M, and we're working on that plan. It's too early to say how that will play out when it comes to market share.
Okay, thank you so much for joining us. Adam Carlson there, the Chief Financial Officer of H&M, joining us on the back of some pretty solid earnings figures. Now, coming up, Apple sales climbing 11% to a record $124 billion in the first fiscal quarter. Have they conquered the supply chain? That story, our main story, is up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Rome. Now, we're just getting some breaking news. The Italian Parliament will actually hold 2 votes on the new president today. Now, this is quite a big deal because it means they want to speed up the process. It also means that Mario Draghi could have a better chance of getting it because they still haven't found a consensus candidate, and he's still emerging as one of the favorites. Very quickly onto the papers. I know it is a very murky process, so for our international audience, hang in there. We'll have a name at some point. If it's not today, it could be tomorrow or next week. But some of the papers have been really fun. Il Tempo, for example, with the voodoo doll of Mario Draghi. In political chaos, there's always someone with a sense of humor trying to, I guess, kill off some of the other candidates to become president, which would secure him a 7-year term. Another one is Matteo Salvini, a half-naked Matteo Salvini, going back to one of the scandals of him in a discotheque a couple of years ago, and some of the more mainstream papers, such as Repubblica, just playing it quite straight, also La Stampa, playing it quite straight, just saying we'll have to see, and hopefully we'll have a name pretty soon. Now, on to corporate earnings. And Apple, the world's most valuable company, beat sales estimates, marking a victory against a supply chain crunch fueled by both the pandemic but also by chip shortages. Well, joining us to discuss all of this is Bloomberg Quick Takes' Alex Webb, who's also a Bloomberg Businessweek columnist on technology. So, Alex, good morning. First of all, how did Apple beat the supply chain crunch? Did we overblow the dangers to it, or did they find a way of securing more chips?
Well, it's a bit of both, actually. That Apple said that iPad sales were perhaps a little less than might have been expected, but that was partly because they were taking components that were intended for iPads and directing them towards iPhones. There's obviously a lot of shared technology between those two devices. We also know that Apple is generally very, very good at managing market expectations. The analyst community had built in about a $10 billion hit from the supply chain constraints. In reality, the company said it was about a $6 billion hit, and needless to say, they beat analyst estimates by $4 billion, so you can see that delta in there. But they do have, a very well-oiled supply chain machine built by Tim Cook.
So does it mean that actually we could see, some of these supply chain crunch also being used for a lot of other technology companies? And what does it mean for stock prices?
Well, I mean, there are other companies that clearly are more, have already been hit more drastically by this, not least Tesla. Apple's supply chain, it's been around for 10, 15 years in its current form. And as I said, it's very, very well oiled. The others, which are a bit newer, don't have quite the same. They're quite aggressive, actually, Apple supply chain operatives at times. They don't have that same, approach. They are already suffering. And of course, there are companies that are purely dependent on their hardware. Apple has services businesses as well.
So, Alex, valuations. How are these tech companies valued compared to some of the broader market?
Well, Apple's valued at the moment about 27 times forward earnings. It is a premium to the S&P's sort of 24 times forward earnings, but not a significant one. If you look at Amazon, it trades at 40 times forward earnings, Tesla 80. I'm not suggesting that Apple's going to go anywhere near to Tesla anytime soon. But the thing that's interesting is as other companies start to recover from the pandemic in a forceful way, we might see some revisions to the upside on their estimates. That means that they will look slightly cheaper. And there's a possibility that some of the some investment cycles out of the likes of Apple and Microsoft and towards those other companies that increasingly look a bit cheap.
All right, Alex, thank you so much. Alex Webb there with some of the tech stocks that we need to watch. I'll be here in Rome, of course, probably throughout the weekend. Certainly we'll be here possibly live on Monday as we await the President of the Republic. We just found out that there will be 2 votes in the Parliament. It's a beautiful but overcast day today, so maybe we get on with business and find a consensus name. In the next hour, Matt Miller and Kailey Leinz will be in New York, or Anna Edwards in London. This is Bloomberg.
Once again, the hallmark of the Fed is they talk a lot tougher than their actions.
What's clear is Powell's very data dependent on the rate path.
I think the one concern that I have, and it's a big concern, is the fallout in the financial markets. We're all flying a bit blind here.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Friday, January 28th. Our top stories today. Apple survives the supply chain crunch. Quarterly revenue easily beats Wall Street estimates, and the company projects that sales will rise by double digits in the March quarter. It may be a fragile end to a rollercoaster week for U.S. equities. Investors still trying to figure out the impact of soon-to-be higher interest rates and bracing for an attack. President Biden tells Ukraine's leader that Russia could invade sometime next month. Welcome to Bloomberg Surveillance. This is the early edition. It is Friday. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, it seems every time I look away from the European equity markets in the last couple of hours, we take a leg lower. Sentiment not the best this morning.
Well, Anna, it's been like that kind of all week. Every time you look at the equity market, it seems to be in a different place than it was just a few minutes beforehand. It's Friday. Thank the Lord. I am a little bit tired, if I'm being honest, after this week. I think also there was getting a little bit of relief in Asia overnight. Some positive news for most of the equity market benchmarks there. You did have the MSCI Asia Pacific Index up for the first time in 6 days, rising about 0.5%. The one exception to that story was China. The CSI 300, of course, had fallen into a bear market in the Thursday session. Those losses did continue on this Friday, down 1.2%, even though you have state media, funds coming in to buy, trying to support the equity market. But maybe there was just a little bit of selling pressure as people tried to close out their positions ahead of the New Year holiday next week. Now, of course, I did want to point to one individual stock in particular, and that is Hobson Development. Of course, a developer in China, really weighing on property stocks across the board as PwC, its auditor, has now pulled out because they couldn't get sufficient information. And that followed a couple other auditor exits this week, creating some concern potentially about a wider exodus. That stock was down 17% in the session, its worst dropped since 2000. And finally, I did want to point to what's going on in the bond market as well. Broadly, you actually saw sovereign bonds bid in the Asian session overnight. The one exception to that was Japan. The 30-year yield there posting a 3 standard deviation move up 2 basis points to 75 basis points. You're actually seeing a lot of movement in Japan, which is something we don't necessarily see all that often, Matt.
Yeah, and well, you know what I was thinking? Maybe, Kailey, we're all a little tired out from this week. Maybe we won't see the kind of volatility and the volume that we have in the last 4 trading sessions. As I was thinking that, I saw S&P futures move down from up. So we were looking at gains. Now we're looking at a drop, still basically unch, but it's a little bit of movement there. The 10-year yield back at 184. Remember, yesterday we saw that drastic dropping, and now we're back right where we were on Wednesday. So 183.55 to be exact, which I probably should be with the 10-year yield. You know, I get excited about the dollar index right now at 1191.76. We're seeing some real strength here, and we had come off our November highs of 1194, but we're getting back up there right now. And I wonder if that's a safe haven bid or if that's just that the whole world expects more interest from the Fed, so they're getting into the greenback. NYMEX crude up right now, 86.95 a barrel. And by the way, Brent crude is trading just under $90 a barrel, so we're watching those levels. Anna?
Yeah, absolutely. More on Brent in just a moment, Matt. We are far more negative than unch here on European equity markets. We started out with some higher expectations, I suppose, but European stocks falling down by as much as 1.6% on the Xetra DAX this morning. We are nervous around the growth story, nervous around the German growth story in particular. That German data coming in showing a contraction in the last quarter. Also nervous around supply chains. More on that in just a moment. Back to the oil story. I've got the Brent price in for you to see this morning, and we are seeing further concerns around geopolitical risk pushing oil prices up again. We actually went up as far as $91 on Brent earlier on in session. So that is where we got to on the oil conversation. And that keeps inflation very front and center, doesn't it? And I was looking at the GMM earlier on, and that column dedicated to commodities all in the green. Electrolux also dealing with its inflation pressures and dealing with supply chain issues. And what that means is unmet demand for a company that makes home appliances. That stock down by just over 6%. LVMH, the luxury goods company in France, that stock performance fading as we go through the session. It was much stronger earlier on, demonstrating pricing power, now telling us that familiar story about how strong luxury goods are performing as people get out and travel just that little bit more. Talking of traveling a little bit more, outdoor advertising businesses reflecting some of that return to normality in some parts of the world, at least. JC Decaux over in Paris up by 9.9%, Kailey.
All right, Anna. Well, of course, we're all excited today is Friday, but we still have to get through the full day ahead, and there is a lot to pay attention to. French President Emmanuel Macron and Russia's Vladimir Putin are due to hold a phone call this morning to discuss those Ukraine tensions. Then we'll still have earnings rolling out throughout the day. Chevron and Caterpillar will cross before the opening bell. And at 8:30 a.m. New York time, we will get a lot of U.S. economic data, including U.S. personal income and spending, as well as that PCE deflator, of course, the Fed's preferred inflation gauge. And then finally, rounding out the economic data at 10 a.m. Eastern time, we'll get University of Michigan consumer sentiment data. Matt, it'll be really interesting to see how sentiment is holding up amid these inflationary pressures and also market turmoil that has had a great wealth effect for a lot of Americans.
Yeah, absolutely looking forward to that, even though it comes from the University of Michigan. Let's get to the world's most valuable company right now, reporting earnings after the bell. Apple, strong results, defied fears of a supply chain disruption. Bloomberg's Laura Wright has the details. And Laura, what were the key takeaways on how Apple was able to achieve results that were so much better than the street's estimates?
They were so much better. What supply chain crunch? On the call, Tim Cook defended Apple's supply chain. We're seeing Apple surging in the pre-market revenue just shy of $124 billion. EPS smashed, coming in at $2.10. The street's expectation was $1.90. Gross margins at a 10-year high. Apple successfully launching lots of new products. Services, phenomenal growth. Macs, phenomenal growth. We know that Apple is pivoting toward a more services-based ecosystem, and the hybrid shift to working seems to be here to stay. iPads, tablets, disappointing. They were down 14% for revenue year over year, but that's because Apple has been prioritizing components in their iPhones. The regional picture is also interesting, worth taking note. China, a clear outperformer, 21% growth revenue year over year. Japan in double-digit negative territory, suggesting that particular market is saturated.
OK, so that's the picture geographically then, Laura. How were the results received by analysts, with other tech titans set to report next week, of course?
I spoke with one analyst in the early hours of this morning from Evercore ISI, and for him, look, March is going to be crucial. We may see some potential headwinds there, but some upside later this year. The iPhone 14 is being launched. I was telling Anna earlier, I'm still using the 8. I feel old. Is that embarrassing? Am I far behind the curve? And Apple is entering the metaverse in the autumn. Speaking of the metaverse, augmented virtual reality, next week, yes, we have Meta Platforms along with Alphabet and Amazon. Another big week. The walled garden of advertising in focus and the structural shift to online selling from a number of businesses after the pandemic.
Laura, if you still have an iPhone 8, I'm surprised it's still working. That's actually pretty impressive. Thank you so much to Bloomberg's Laura Wright. And of course, Apple giving a boost to NASDAQ futures this morning after what has been an incredibly volatile week. Bloomberg's Kriti Gupta is joining us now for a technical look at the action. Kriti, how do we even make sense of the last 5 days?
Yeah, well, it's fascinating because you're starting to see the tech just largely under pressure, but it's also dragging the entire market lower. This is going to be a big story, especially when it comes to the SOX index, because Laura was just talking about the idea that the metaverse is the next thing that's getting fueled. But how do you fuel that metaverse? How do you take that next step? Well, semiconductors are a really big part of it, in addition to their use case for things like electric vehicles. So I want to take a look at the technicals of the SOX index, because you tend to see the moves in big tech that you're seeing in the S&P 500 magnified in the SOX index. Take a look at this. For going back to a year, the RSI, the 14-day RSI, which is this bottom panel right here, tends to be a little bit of a roadmap for when you see this broader index bottoming out. You saw it over here in May. It dropped down to that oversold position, and now you see a little bit of a bounce back. Same story when it comes to October. And now, once again, we're hitting that same level after a 20% drop in the SOX index this time. The question is, do you start to see the S&P 500 and the NASDAQ in particular follow? At the end of the day, these chip makers really lead to a lot of big tech supply chains, and we know those companies make up the majority of the S&P 500.
Kriti, we felt, the Russia risks weighing on the market since the beginning of the week. How does that show itself in the data?
Oh, well, this is going to be fascinating because it's in the Bloomberg Commodities Index. Everyone is talking about oil, right? A knee-jerk reaction of as much as $10 on a Russian invasion to Ukraine. But no one's talking about wheat, aluminum. Together, Russia and Ukraine make over a quarter of the world's grain supply. Aluminum, a major exporter, is Russia, of course, for, say, cars that, of course, need that to create more of their products. Take a look at this. The last time, 2008, you had this major peak in the Bloomberg Commodity Spot Index. That was post-recession. 2011, a food crisis, once again created by a crop crisis over in Russia. And here we are all the way over here in this kind of spot index, hitting a record high once again. The latest leg higher is coming from really pricing in the risk of that invasion, Matt.
Thanks very much to Bloomberg's Kriti Gupta. Yeah, much broader than just oil. I was looking at palm oil. I mean, that's not a Russia story, but that also trading at a fresh record. Let's stick with the geopolitics, though. President Biden has warned the president of Ukraine that there's a distinct possibility the Russians could invade next month. That is according to the National Security Council. President Biden spoke to Volodymyr Zelensky yesterday. Emily Wilkins, Bloomberg government reporter, joins us now from D.C. What is the detail then behind this warning that we're hearing once again from President Biden, despite the Russians really emphasizing, it seemed in the last day or so, that they're still talking?
Washington is very much gearing up for a potential attack. I mean, you've seen it all this week in how the U.S. has moved in sending troops over to Eastern Europe. And you're hearing it more with President Biden's rhetoric over his phone call with the Ukrainian president. I mean, this is something where you have heard the two of them on different pages on whether or not an invasion is likely. And so that was part of the discussion yesterday, as well as some of the economics. And that's something that the U.S. is really trying to keep in mind here in terms of energy, in terms of gas, in terms of other items that need to get to Ukraine. How are they going to position themselves so if Russia does attack and there are sanctions levied, that Ukraine and other European allies aren't extremely hurt by those sanctions?
Yeah, it's interesting. He seems so sure it'll happen. I'm surprised he didn't use the word imminent in the phone call, Emily. In terms of what's going on with China, we've already seen one bill go through to try and counter Chinese competition. Now there's another, but it looks like there's some GOP opposition. Why is that?
So it's important to note that a lot of this Republican opposition is coming in the House, that this bill, slightly different version of it, did pass in a bipartisan manner in the Senate. And all that really needs to do for this bill to go forward, because the House and the Senate are going to come together with their different versions, talk it out, and produce something new. So technically, if House Republicans oppose this bill, it means it can still get past the House, it can still go to that conference, and they can potentially come out with a more widely supported bipartisan product. That said, Republicans say that they're not fans of this bill because it's a little more partisan than what the Senate put forward. They feel that Democrats didn't work with them on it. We've heard concerns from Michael McCaul, the head of the Republican head of the Foreign Affairs Committee, and they've put it out there that they really don't think they're going to be able to support this legislation when it comes to the floor. But it'll be, I think, more interesting to see whatever product comes out of those House and Senate discussions, whatever bill they come to an agreement on. That's the one I think more people will be looking to Republicans to see whether there is more widespread support there.
All right, Bloomberg's Emily Wilkins of Bloomberg Government in Washington for us this morning. Thank you so much. And now let's get back to the markets. Take a look at some stocks moving in pre-market trading here in the U.S. Absolutely plunging to the downside is Robinhood. It reported after the bell yesterday. Revenue missed expectations, a greater loss than expected, plus users were down 8%. Revenue per user also disappointing, and as a result, that stock is down nearly 14% before the bell after already being down 69% from its IPO price earlier this year. Another mover to the downside is Western Digital. Supply chain issues a big challenge here as its guidance missed expectations. That stock is down about 8.4%, but it's a little bit of a better story for Visa. Beat on the top and bottom line. Payments volume up 20%. Both Visa and MasterCard really underscoring some strong spending trends. And as a result, that stock is up about 4.6% before the bell, Anna.
Lots to talk about with Dan Ives this morning. We'll be talking tech. We've had a lot of earnings already. We'll get more next week. Dan Ives, Wedbush Senior Equity Analyst, joins us shortly. This is Bloomberg.
Earn Earnings season is here.
It has been brutal.
A little bit of disappointment in some of the early reporting.
Bloomberg is fastest with the numbers and analysis.
This is a mighty crash.
What to buy and what to run away from.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York with Kailey Leinz, Anna Edwards with us out of London. We are simulcast on Bloomberg Television and on Bloomberg Radio, which is why I don't normally show you a chart. I just talk about the data and then we move on. Obviously, radio listeners can't see what we're looking at, but this is one of those times when I would recommend, as soon as you get to work or as soon as you get near a Bloomberg terminal, log on and type in G#BTV5149, because this chart really is worth looking at. This is the one historical example we have of quantitative tightening and how it affects risk assets. Bonds did, well, the curve flattened the last time we saw quantitative tightening, and stocks were so-so. 2018 was a down year. 2019, we came back. But still, it looks like risk assets have it kind of rough, and that's what the market is worried about right now. Joining us to talk about this is Christine Aquino. She helps lead our markets coverage out of London. Christine, what is this the biggest concern, would you say, the quantitative tightening as far as what the Fed's going to do this year?
Well, Matt, it's definitely that, and it's combination with the rate hikes that we're also meant to be seeing from the Fed. So this is quite unprecedented, the idea of the Fed entering a tightening cycle using two levers in its arsenal. Of course, the quantitative tightening that you mentioned, the process of rolling off bonds from its balance sheet, but also raising those rates and perhaps raising those rates faster than markets expected. And so it is very much this full blaze tightening cycle that we're seeing here. And it will be really interesting to see how that plays into markets, because of course that will have repercussions for the short end of the curve. Those 2-year Treasury yields really ramping up much higher. Potentially will have to do much more to reprice this. But then of course the long end of the curve very much reacting to that process of the Fed rolling off bonds from its balance sheet. What sort of maturities will they start looking at initially, and how does that impact the shape of the curve moving forward?
Yeah, absolutely. And then in the last meeting, Christine, good morning, by the way, we heard a lot about the interest rate hikes, not so much about the quantitative tightening and how that plays out and what opportunity there is to steepen the curve with that particular process. So we'll leave that one. Let's get back to Europe, where we are, and think about the growth story here, because the markets were negative already before we got the German data that showed that the economy was in contraction in the last quarter of last year. Quite a surprise to a market that's, well, that data's fallen on a nervous market, I suppose.
Absolutely, Anna, and I think it really does speak to the fragility of the European economic story still. And with that context, you can understand why the ECB has been very emphatic about the fact that it's not going to raise rates in 2022, despite the fact that its counterparts in the US and the UK are very much heading into the tightening cycle. It is still very much a fragmented sort of economy. Germany, of course, still reeling from the effects of the virus over the holiday period, as well as some of those supply chain issues. And then when you look at it in the context of France and Spain doing slightly better, more on consumer spending, you can really see it's at different paces, and this is the dilemma for the ECB next week.
Do we have to get through the ECB and BOE next week before the equity markets globally can actually focus on earnings?
Well, Kailey, I think it will have to be a simultaneous factoring in of all of these catalysts. I mean, this is exactly what we already saw this week when earnings season is just starting to kick off. But, we had the earnings catalyst, but of course we had geopolitical risks to consider as well. And then to cap it off, the Fed hawkish surprise and Apple earnings to top it all off. It makes for a really eventful week. And I think next week will be very similar. We'll be hearing from a lot more companies how and we'll see, the real-time effect of inflation and how these companies are able to deal with that, and then from central banks and how they're dealing with that via policy.
Okay, we'll all need a good rest over the weekend, Christine, to prepare for more volatility perhaps next week. Thanks very much to Bloomberg's Christine Aquino from the Markets Live team, of course, and you can get further analysis from the Markets Live blog. That's on your terminal. MLIV Go is the function. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now let's get the first word news. And President Biden says he will fulfill his campaign promise to nominate the first black woman to the Supreme Court. The president says he'll announce his choice by the end of February. Justice Stephen Breyer has formally told the president he will retire in June or July, assuming a successor has been confirmed. North Korea has now confirmed that it's launched 4 missiles this week. The tests include the launch of 2 long-range cruise missiles that could give Kim Jong-un's regime the capability to hit almost all of Japan. Kim has ramped up weapons testing in an effort to signal unhappiness with the U.S. over economic sanctions. The European Union and the UK reportedly are gearing up to sanction new Russian gas projects if there's an attack on Ukraine. That's according to the Financial Times. The sanctions would drastically cut financing and technology transfers for gas facilities. And China and Russia will sign an agreement to build a research station on the moon. The two countries aim to complete basic infrastructure construction for the lunar station by 2035. It's the latest sign that the new race to go to the moon is heating up. Next month, the U.S. has scheduled a major test of its Artemis program, an effort to return astronauts to the moon later this decade. And once again, I say, Anna, to the moon.
Yeah, this time we're not talking about memes, are we? And we're not talking about investment strategy, although obviously a big investment theme still. Coming up on this program, Karim Chedid, head of investment strategy for iShares EMEA. We will be talking with BlackRock about investment strategy, where they stand on Europe and European value in particular. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Here is what you need to know. Shares of Apple are higher today. Fiscal first quarter sales and profit easily beat expectations. That's seen as a victory over the supply chain crunch. Meanwhile, Apple forecasts that sales would grow by a double-digit percentage in the March quarter. Apple moves higher in pre-market. It may be a shaky end to a roller coaster week for U.S. equities. Nasdaq futures pairing earlier gains. Investors are weighing the impact of upcoming Federal Reserve interest rate hikes. President Biden has warned the president of Ukraine that there's a distinct possibility the Russians could invade next month. That is according to the National Security Council. President Biden spoke to Volodymyr Zelensky on Thursday. That is a look at what you need to know this morning. Matt, there is a lot going on this Friday as we get ready for the last session of the trading week. It's been a volatile week.
It's been an incredibly volatile week. As I think Kailey was pointing out, we saw the kind of swings the last couple of days that we haven't seen since 2008. We had 2 days in a row of gains of more than 1.5% and then finished down. Right now, we don't see a lot of movement on the S&P futures. They're pretty much unchanged, although the arrow is red. So if you're a glass half empty person, that's fine. The U.S. 10-year yield is rising. This should be green for the glass half full people out there because the yield is on its way up and the arrow is pointing up as well. In any case, it's red because people are selling bonds, and that makes the yield go up to 183.55. 1191, almost 1192 on the dollar index. So the greenback has some real sway. A lot of people out there saying cash rules everything around me right now, unless they want digital money. In that case, Bitcoin is on its way up. But still, you know, I've been telling you the last couple days, we see this range, and we seem to be range bound here. 36,640 is pretty much the same place we've seen Bitcoin every other day this week. Kailey, what do you see in terms of pre-market movers?
Well, there's a lot of them out there at the moment. Of course, Apple is really the big company story we are following today. Anna mentioned it. Supply chain crunch, no problem. Record quarter on many metrics for Apple. Even if the iPad did face a little bit of a challenge in the quarter, that stock is up 4% in pre-market trading. Not so lucky, though, for Robinhood. You had revenue missing expectations, a bigger loss than expected. Users down 8%. All of that resulting in a 14% decline for the stock, adding to an almost 70% loss it's seen since its IPO. And then, of course, Tesla got hit extremely hard after earnings yesterday. It was down 11.5% in the Thursday session, but starting to see some buying of the dip coming through. Those shares are up about 0.8% as we see Apple really leading tech higher on this Friday morning, Anna.
Yeah, Kailey, a big focus on tech then, and we are seeing selling in nearly all sectors here in European equity markets. Matt showed us the S&P futures just edging down a touch. Well, we're doing more than that here in Europe. We're down by 1.5% and more in some of the bigger markets here, and most sectors in negative territory. One of the things we continue to be nervous about, of course, is inflation, and for that reason, I'm showing Brent crude here, 89.68, ever higher. It almost seems like when it comes to the oil price, although that's obviously not the case. But we are moving higher today, 89.68. We've been above $91 in the last 24 hours, so that is something we are certainly watching. Geopolitical risk in the mix there. We're nervous around the growth story, nervous around confidence in the growth story here in Europe. We're also nervous around supply constraints, and that's something that's weighing on Electrolux. They supply household goods, of course, and if they can't get all the chips they need, they can't sell all the product they want to, and that means unmet demand. The stock moves lower. LVMH, a positive story coming through from the luxury handbag and other jewelry manufacturer, a story of really strong pricing power coming through, although the stock performance fading there. One stock performance that's faded a little but still really strong, the outdoor advertising business, JCDecaux, underlining that advertising outdoors seems to be back, certainly when you think about the increased mobility that we've seen from certain parts of the globe as we recover from that pandemic. Let's think about where we go for the equity markets from here then. It's been a really volatile January. One of the themes has been selling tech. It's been getting back into value perhaps. And I've got a chart that shows exactly that theme and what we can expect to see on value. For those listening on radio, this is showing European value stocks set for their biggest monthly outperformance on record. Is this outperformance by value or underperformance by tech? Either way you look at it, this could be good for Europe if it continues. Karim Chedid is head of investment strategy for iShares EMEA at BlackRock and joins us now. Karim, good morning to you. So how much are you getting involved in the value trade, the European value trade at this point?
I think it's very interesting, the chart that you're showing, the European value outperformance. It's something that we're seeing come through strongly in ETP flows. So where I sit, we're laser focused on analyzing some of the trends from investors in ETP flows because it gives us a sense of what's happening amidst this market volatility of the past few weeks. And the answer is, we're not really seeing a rush for the exit, but we're also not really seeing a significant buy on dip. But what we are seeing is a significant tilt on a sector, region, and factor level. And the beneficiary is really value. So the value factor, inflows are picking up significantly, especially in Europe, especially in sectors that are, cheap on a valuation basis, that feature heavily in value, such as European banks. And we're also seeing this come through on a regional tilt with a bit of a preference for European equities coming through in flows at the expense of areas like US equities. Does this have legs? I think it could. It could have legs in the context of the view that we're really here in an economic restart, not a recovery. So any extra growth that gets delayed will come through later, and that's really supporting some of those cyclical plays.
Yeah, Karim, I pull up ETF Go on the Bloomberg to follow these flows, and I see outflows in the SPYs, in your IVV, in the Qs. Where do you see the most pressure here?
The most pressure really is coming through on a slowdown, not so much significant outflows. So again, it's not really a rush for the exit, but not a buy for this. This is the headline that I will take away from what investors are doing at the moment. So it's a slowdown in buying relative to December in US equities and in some of the large cap areas. But having said that, you were talking about the Apple number this morning. We do still like tech. We do still like those quality names, which is why we keep talking about this barbell approach to equities with a look on value and on quality at the same time. And, tech, we did a big analysis the past week on which are those companies that have the best pricing power, that have the ability to withstand tougher margin environment in the context of more sticky, higher input costs. And tech really comes out on top in that analysis. So there's room for both.
What are you expecting in terms of the economy? I mean, we've heard forecasts for single-digit to 15% earnings growth this year. We've heard forecasts for inflation to start coming back off of 7 handle in the second half. But their concern is that the Fed moves too far, too fast, and pushes us into an inverted yield curve and a recession following that.
Yeah, so let's, stepping back and framing this conversation on the macro environment for 2022, we're seeing some trends here already in some supply chain pressures easing, like we did in Apple, except for, the iPad figure. So those supply chain pressures easing are really a main driver of why we see the surge in inflation that has been coming through in the first part of the year, likely to start moderating as we progress in the year. So moderating back down in Q2, Q3, Q4, which should help with some of that inflationary pressure. On the growth side, again, this is really a restart at play. And what the restart dynamic suggests is that we're seeing a significant catch up in growth that's coming through despite some of the tightening that's getting priced in and the tighter liquidity conditions, especially from the Fed. So all in all, what does this mean for the earnings growth question that you were asking earlier? I think it means high single-digit earning growth. It means an environment where we can't rely as much on multiple expansion, but we can rely on a decent but not stellar earning growth environment.
On the subject of inflation, which you were just speaking about, Karim, where are people looking to hedge against it?
Yeah, inflation hedging is a huge area of focus for us. We're seeing this come through in equities on a sector level. Some of the inflation hedges that are coming through are in areas like value again, are in areas like financials. Financials alone has seen $9 billion of inflows in ETPs, in sector ETPs, which has become a growing share of the overall equity flows to show that, sector ETPs are increasingly becoming a go-to for selectivity for investors. But we're also seeing this inflation hedging theme come through in listed private markets like infrastructure. Infrastructure equities have become a much bigger theme for us. And then lastly, in commodities. Commodities as a whole come up as an inflation hedge. Gold divides opinion. It's more of a hedge that investors are looking at in a high inflation regime, less so in a moderate one, but it's definitely a talking point.
Karim, thank you very much. Thanks for your time. Karim Chedid, BlackRock Head of Investment Strategy for iShares EMEA. Thanks for spending time with us here on Bloomberg TV. Next up on Bloomberg TV, we're going to talk Apple. Dan Ives joins us, Wedbush Senior Equity Analyst. We'll talk Apple. We'll talk all the other tech news flow as well. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Chevron CEO Mike Wirth. That's at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
We set all-time records for both developed and emerging markets and saw revenue growth across all of our product categories except for iPad, which we said would be supply constrained. As expected, in the aggregate, we experienced supply constraints that were higher than the September quarter.
Apple CEO Tim Cook speaking yesterday after the company's first quarter sales and profit easily beat expectations. That is seen as a victory over the supply chain crunch. Shares of Apple are higher in pre-market trading. And joining us now to discuss is Dan Ives, analyst at Wedbush Securities. Up early for us this morning. He has an outperform rating and $200 price target on Apple. Dan, was this a case of us overestimating supply side challenges or underestimating demand?
Look, I think Apple really flexed their muscles, not just when it came to the supply chain, but just overall demand. I mean, demand for iPhone 13 is outstripping supply by about 15%. And when it comes to supply chain, remember, Apple's at the head of the line. They have a great view, probably better than anyone else. The fact that it's moderating going into the March quarter, those are words that are going to be heard around the world in terms of, from a street perspective, bullish for tech. And this was just a golden quarter for Apple in face of all these headwinds.
Dan, good morning. What have we learned then from the Apple numbers about the right way, the good things to do to manage supply constraints at this point? Have we learned lessons about the value in being big and having big contracts in place? Have we learned about trading one product off against another, as some people have talked about them doing in the last quarter between the iPhone and the iPad?
Yeah, I mean, look, I think Apple, obviously, because of where they sit on their hardware ecosystem, I mean, they are always going to have more access to chips than anyone else. And of course, that foothold they have in China continues to be so crucial. But they're, even though it's more Teflon-like, they still had about 10 million iPhone units that shifted from December into March. But it comes down to Cook. He's a tactician, him and the team, in terms of navigating the supply chain and making sure that demand is ultimately met. And it just happens. They came out with iPhone 13 that continues to just, globally be a massive seller, best holiday season ever. And China, despite the fears, that's the linchpin of growth. You takeaways here, in my opinion, given the headwinds, this is probably one of the best Apple quarters we've seen in the last decade.
I wonder what you think about this factoid from the story, Dan, that just shocked me. There are now 1.8 billion Apple devices currently in use, up 300 million from 2 years ago. So they've made a huge jump. Is that kind of growth to be continued? Can we expect that to keep up at this pace? And where is it coming from? Is that coming from China?
Yeah, and Matt, it's a great point, because if you look at China, I mean, our estimate is they've gained about 250 bips of market share in the last 18 months in China. Now it's best selling smartphone in China. Haven't seen that in 6 years. I mean, look, I think it just shows iPhone 12, iPhone 13, that tag team in terms of the introductions on 5G. It's really been a rocket ship in terms of demand. Also, 250 million of 975 million iPhones worldwide, based on our estimates, have not upgraded their phone 3.5 years. So there's huge pent-up demand, right product, right time, despite supply chain. I call it a Mahomes-like performance from Cook last night.
Dan, Anna hasn't gotten a new phone since the great financial crisis. How many phones out there are using 5G, and how important is 5G to Apple's growth strategy?
I mean, 5G, it's the hearts and lungs of the growth strategy. And it's not just from iPhone 13. Look what's happened across the board in terms of them now producing their own chips. And you look at 5G today, that's still only about 8 to 10% of overall bases is really now upgraded to 5G. So as this goes forward, it continues to be our thesis. It's a renaissance of growth in Cupertino. We could argue valuation all day, but I believe this is a sum of the parts valuation between services, which is Rock of Gibraltar, we think worth $1.5 trillion, and in a market that's just been nervous, white knuckle backdrop. This is the news the street needed to see, along with Microsoft earlier in the week, that I believe reverses the tech trend. Haters will continue to hate, but I think 6 months from now, Apple is north of $3 trillion sustainable as a market cap.
Okay, Matt was exaggerating, but he does have a point, and so do you, Dan, about the number of people who haven't recently upgraded, me included. Let me ask you about the unanswered questions, though. You think that we've learned a lot this week from Apple and from Microsoft, answered a lot of those questions around tech, and you think we're kind of back to the races there. What is the big unanswered question for next week, then, as we go into the earnings story there?
Well, I think it's the supply chain, and I think that's the missing piece. Look at Tesla. Tesla called out supply chain. I think that was more of conservatism. Apple see it moderating. Now, next week, we look at other chip players as they come out, other software names. It comes down to this, our view. Software and chips lead tech higher. Work from home names will fade. You can't put them all in the same bucket. And I think tech is way oversold here. And in our opinion, you look at Apple, this is going to be that life raft in a market sort of turmoil that I think turns around tech. And it's, again, it goes back to when Cook talks, everyone listens. He and Apple have the best view of the supply chain as anyone globally.
Okay, so we'll listen to him. I'm also listening this morning to the CEO of ST Micro talking about no easing of the shortage of chips until 2023, but that's them talking about that specific type of chips they make. Dan, we thank you very much for your time. Dan Ives, Senior Equity Research Analyst at Wedbush Securities. We appreciate the early mornings with us. Now, the Italian Parliament is set to hold 2 votes for a new president today. We're live from Rome next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, Italy is entering day 5 of voting for a new president. Lawmakers still haven't managed to agree on a new president after a 4th round of voting, a sign that it will be harder than initially thought, perhaps, for Prime Minister Mario Draghi to get that job. What does that mean for the international audience? Bloomberg's Francine Lacqua is still with us from Rome. The longer this takes, the more time you get to spend in Rome, though, Francine. But tell us, are we nearly there yet?
Win-win. I know everyone's distracted. I feel like the parliamentarians may be distracted by the good coffee and the beautiful views. The longer this takes, I think probably on balance, the chance of Mario Draghi becoming president increase. So he would leave the prime ministerial road just because it means, Anna, that it's more difficult to find a consensus candidate. However, we also found out moments ago that there will be 2 votes today. So it does seem that lawmakers want to get on with it. So every time they vote, it means that they have a better chance of actually finding a name. If it's not President Draghi, then we'll have someone else. A number of names have been floated, but they change very, very often.
Remember the espressos we had in Bari for, what was that, the G7, the G20? They were delicious.
Everything's delicious. And of course, there's an inflation, dimension to every espresso here in Italy.
In what sense? Like they're more expensive, or you just need more of them?
Yeah. I mean, both, but actually they are more expensive, which is why a lot of people are saying, look, this is a disaster. They used to be €1.20, €1.10 in certain parts of the country, and they're now up to $1.50. And this is actually a political hot potato, Matt, because Italians, cannot live without their espressos. And this is also front page news of a lot of the papers. In fact, if you look at the papers, Matt and Anna, a lot of the focus is on, look at this. This is fun. Mario Draghi with a voodoo doll, hoping to get it. This is the front page of Il Tempo. And then page 2 and 3, they talk about inflation and they talk about the espressos. We also have another fun one with Matteo Salvini, who could be the big winner if we go to early elections. There's a picture of him half naked going back to a scandal at a discotheque that happened a couple of years ago. But again, it's all of these major political parties that are trying to find, dealing with inflation and also finding the next president of the Republic of Italy.
All right, so a little bit of continued volatility there for the Italian political situation, but we all wish we were there with you in Rome. Francine Lacqua coming to us live from the heart of Italy. We are also watching a number of other things this weekend. I'm watching the snow. Apparently, we're going to get like a foot of snow here. I'm not sure if that's meant for actually, in Manhattan and New York City, because things just grind to a halt when you get that much snow here. But it seems like it could happen tonight into tomorrow, and hopefully it's all cleared up by Monday so we can get back to work, Anna.
Hope you have some good indoor weekend plans then, Matt. I'm watching geopolitics, global geopolitics, of course, tensions with Russia. We've heard from the Russian Foreign Minister, Sergei Lavrov, sounding a little more conciliatory, talking about the being receptive to the U.S. proposal. It involves some rational elements, he says. This coming just as President Biden, of course, has been warning the Ukrainian president about invasion next month. That's what the U.S. line is at the moment. At the same time, they talk financial support. So we'll watch that, of course. We're also watching the markets, though, watching NASDAQ futures fading just a little. The closer we get to the U.S. session, the further we get through the European session, which is now down by 1.5% on the Stoxx 600, the more we fade on NASDAQ futures. The Apple effect, we'll see how long that lasts. More Bloomberg Surveillance is ahead. We'll hear from Dean Kernert of Macro Risk Advisors and Anna Han of Wells Fargo, amongst other voices. They will keep you in touch with all those market moves. E-minis down 0.3%. This is Bloomberg.